Everyone is afraid of AI. People fear robots taking jobs. Investors fear algorithms replacing workers. Politicians fear a technological revolution. But what if the biggest threat to the United States economy isn't artificial intelligence at all? What if the real danger is something already hiding in plain sight? A force so powerful that it controls trillions of dollars, influences elections, moves stock markets, and grows stronger every single year. Because while America is watching AI, a much bigger risk is quietly reshaping the future. In 2025, AI became the center of the financial universe. Companies like NVIDIA, Microsoft, Amazon, and Alphabet added trillions of dollars in market value. Wall Street couldn't stop talking about AI. Investors rushed in, stock prices exploded. But this is where things get scary. Throughout history, economic collapses rarely came from the danger everyone was watching. The biggest crashes often came from risks people ignored. And today, one risk stands above all others: concentration of power. A few decades ago, America's economy was powered by thousands of competing companies. Today, a surprisingly small number of corporations dominate entire industries. A handful of tech giants control information. A few financial institutions influence global capital. A small group of asset managers own significant stakes in much of corporate America. And almost nobody noticed this. The world's three largest asset managers, BlackRock, Vanguard, and State Street, collectively oversee more than $20 trillion. That number is larger than the entire GDP of many major nations combined. Think about that for a second. Millions of Americans believe they are participating in a free and competitive market. But increasingly, ownership is becoming concentrated into fewer and fewer hands. And that changes everything. Because when power becomes concentrated, resilience disappears. Imagine a forest. A diverse forest survives storms. A forest filled with only a few giant trees does not. The same principle applies to economies. The United States economy has become increasingly dependent on a handful of megacorporations. Just 7 major technology companies have driven a massive share of stock market gains in recent years. If they thrive, markets celebrate. If they stumble, entire retirement portfolios feel the impact. But the real problem is much bigger. This isn't just about stocks, it's about influence. The larger companies become, the more data they collect. The more data they collect, the more powerful they become. The more powerful they become, the harder it becomes for competitors to challenge them. It's a cycle, and cycles eventually reach limits. What happened next shocked Wall Street. As interest rates rose and economic growth slowed, investors began asking a dangerous question. What happens when the companies carrying the market can no longer grow fast enough? Because eventually, every giant faces gravity. Even the biggest, even the most admired, even the companies investors believe are untouchable. History is full of examples. The railroad giants, the oil titans, the telecom monopolies. Every era believed its champions would dominate forever. None did. And yet, the concentration continues. Meanwhile, America's national debt has surged beyond levels that once seemed unimaginable. Corporations are heavily leveraged. Consumers are feeling pressure. Housing remains expensive. And wealth inequality continues to widen. This creates a fragile environment, one where economic gains become concentrated at the top while frustration grows below the surface. And that's when systems become vulnerable, not because of AI, not because of robots, but because too much economic power becomes dependent on too few players. The irony is incredible. AI may actually be the tool that accelerates this trend. The companies with the most capital can build the most powerful AI systems. The most powerful AI systems create even larger advantages, and those advantages lead to even more concentration. A feedback loop, one that keeps getting stronger. So what does the future look like? Maybe AI transforms humanity. Maybe productivity explodes. Maybe trillion-dollar companies become $10 trillion companies. But if economic power continues concentrating into fewer hands, the United States may face a challenge far bigger than technological disruption. A loss of economic resilience itself, because economies don't collapse when they're weak. They collapse when they appear unstoppable, right before a hidden weakness is exposed. And perhaps that's the question investors should be asking today. Not whether AI will change the future, but whether America has become too dependent on too few winners. Because, if that's true, the biggest risk to the United States economy isn't artificial intelligence, it's concentration. And by the time most people notice, it may already be too late.